Good day, my name is Rowan, and I'd like to thank you for the opportunity to give you my presentation. So I hope you enjoy. Sit back and relax. So the company that I chose was Shoprite Holdings. Shoprite Holdings is a company that started off in 1983, small company in the Western Cape, and they've made significant impact in the African market year on year in terms of the growth and the investments there. The reason why I chose them was because purely they have been really good and they're a household name at the end of the day in the retail sector. That's where they operate. I thought that would be a best company to go for, and that's why I chose them. Just to touch base on Shoprite Holdings and their share price movement for the last 5 years. Clearly between the 2013 and 2014 they made some poor acquisitions in the African market. Sometimes it does happen. Unfortunately fortunately they've improved quite a bit from that. Currently they're sitting on their market price or market share price at 20,417 cents per share, which is brilliant to see, so well done to them. But then comes the next slide, which is their competitors, who are the first thing that comes to mind: Pick n Pay. They've done really well as well, competing with Shoprite month on month or year on year. You can see with the line in red, they've been up and down. They've stuck with the strategy of loyalty and brand loyalty with their Pick n Pay smart shopper cards. But clearly we can see a decline now coming into 2017. That's noticing that the upper LSM market of Shoprite taking its forefront. Okay guys, here are the numbers. I thought I'd put it in a nice format for you and make sure you see it. It's from 2014, 2015 and 2016. In terms of the Shoprite's gearing ratio, clearly you can see a trend in terms of the decrease in gearing ratio. That tells us that the company is doing well in terms of stability. It's decreasing, which is nice to know and nice to see. In terms of interest cover, basically this is how many times the company can pay off its debt. You can see an increase in that, shows that the company can pay off its debt. It's strong. The earnings per share as well as dividends per share shows year-on-year growth, which is nice to see in the retail market. As much as it's low and the difference is not that much, it's still quite high, and well done to them. The fixed assets turnover as well as total assets turnover shows a decrease, but that shows that they're actually renting property if they're going into the African market, which is nice. It shows that they're not committing a lot of fixed assets at the end of the day, as well as they're promoting their market online and they want to go more online, which is what they want to do. Gross margins and net margins tell us that, again, a story that they are making profit, and profit is what sustains companies, which is really pleasing to see. Okay, in summary, social factors are things like load shedding. They need to buy generators and things like that because that isn't considered. Technology, they need to focus on online shopping, something they want to go in. Economy and inflation, very important. They need to ensure that people have money so that they can spend money, as well as petrol increases. Really bad. So what do I think about Shoprite Investment Holdings? Would I invest in them? Hell yeah. They're tough competition from Pick n Pay, but they've held their ground for the past 5 years. Expansion in Africa means growth. Even in the pharmaceutical area, more growth. There's noticeable purchase from foreign investors, which clearly indicates that they want to target that upper LSM segment, which is really nice to see. And then, although be it an economy that's declining in South Africa, we still provide quality and service in terms of Shoprite's and the standards, and it's really good. And that's that. So all the blood, sweat and tears, thank you so much for the opportunity. I really appreciate it, and cross fingers for good marks. Cheers.